Okay, so here we're going to go ahead and get started with depreciation. So here's a list of all the items that I want you to depreciate as well as amortize. So let's go ahead and take it one at a time. So what is the first section for depreciation?
The truck.
All right. So what are the details on the truck?
Is that 150,000 miles or just 150 miles?
It's 150,000. Oh, I see. That's supposed to be a comma.
Okay. So its mileage is 150,000 before it needs maintenance, no salvage value. Its useful life is 7 years. This month we drove it a total of 1,200 miles.
All right. So what kind of depreciation method does this tell you?
Straight line?
Not straight lined.
Depreciation double decline method.
Not double declining. What do you have that's very, very important?
Is it activity method?
Yes. All right. What is the capacity before it needs maintenance?
Before it needs maintenance, 150,000 miles.
150,000 miles. So we're gonna go find your truck. It's one of these shelves. Here's my truck. Okay. Now, depreciation method, which we know, is going to be also known as units of production. So I'm gonna put UOP for short. Actually, no, I'll just type it out. Units of production, so you guys know, also known as activity base. Now, how much do I know what my asset cost is?
Yes, it is the amount when we purchase it.
Okay. Where?
If I'm not mistaken, that 30,000?
Okay, so you're guesstimating it's 30,000.
I have to refer to my notes.
All right, where can we find the exact amount of where our asset costs?
Jerry Ledger?
Did we deal with our vendor when it came to this car?
General Ledger, I should say.
Ledger, good. Under trucks. So assets under vehicles is going to be trucks. So here's my deposit. Here you go, my truck. My truck with tax and documentation fees gave me a grand total of $32,208.90. $32,208.90. So go back to my depreciation table. My asset cost is $32,208.90. All right. So what is my mileage? 150,000. What is my salvage value? Zero. We have no salvage value. And lastly, what is what is my date I placed it into service? So in this case, when do you actually start depreciating it, especially when you have a truck? Immediately. The minute you drive off the parking lot, you automatically start depreciating it. So when did I buy this truck? June 8th. So the date that I placed into service is going to be June 8th. All right. So what does that tell you? If I'm depreciating at the end of the month of June, what does that tell you?
Before the first 15 days.
So you have to depreciate for the month of June. Okay? And how many miles did I tell you that I reported?
1,200.
We drove a total of 1,200 200 miles this month. Okay, so let's go ahead and find and solve for the rest of my information here. So what's my depreciation basis?
Cost minus salvage, so it would be $32,208.90.
Good, right? It's going to be your cost of the asset minus salvage value, which we don't have a salvage value. So that means our basis is going to be 32,208.90, right? And how do we determine the rate?
Asset divided by the unit produced.
So that would be 7 divided by the 1,200?
No.
Produced, so 12.
Okay, so question for you, because it says to find the, are we, we're looking for the expense. Never mind, because I'm looking at something different.
Okay.
Asset cost divided by the mileage.
Okay, so let's look at the formula for depreciation rate, or in this case, it's a per unit rate. So it should be your depreciation basis divided by the total amount estimated for the units produced. So in this case, what is my depreciation basis?
The amount, the cost, the 32,208.
Okay, you want to be careful. Depreciation basis and cost are two different things because in this case, my depreciation basis is my cost. But if I did have a salvage value,
Yes.
then my cost is not my depreciation basis.
Yeah.
So your depreciation basis, which is the 32,208.90,
Divided by the mileage.
how many? Which one?
150.
150,000, right? Your total number of units that it can produce or estimated units it can produce. In this case, we're not doing units production, where you're doing mileage. So in this case, yes, that's how you solve for the rate. It's the depreciation basis divided by the total number of units it can produce, in this case, mileage. So what do I get here? Okay, so I'm going to leave just 4 decimal places to display. Okay, so from there, but make sure you keep that long calculation in your calculator. Now, what is my depreciation expense?
The rate times the miles.
Mm-hmm.
So 0.2147 times 1,200.
Mm-hmm. So I'm going to do equal round because I have that long number for my rate.
257.67.
256.67. 257.67. Good. So then what's my accumulated depreciation? You don't actually need to solve this because we're not going to go into the future, but let's go ahead and do it.
257.67.
Okay. And so then what is my total book value for my truck?
Okay, 250 minus accumulated minus 257.67.
Mm-hmm.
$31,951.23.
Good. All right. Now, question to you. Why is it that I don't need to change the depreciation expense? Because in this case, my question to you is, why do I not need to adjust it? Why do I not need to adjust it? Meaning,
The first year,
is it the first year?
or within that, I do not know, I'm sorry.
Anybody want to throw a wild guess?
I would, but I don't even know how to begin.
All right.
The first year, normally the first period, the accumulated depreciation would still be the same as the depreciation expense.
So the question was what now? Repeat it for me.
So, my question is, if we started this in June, okay, do we need to make an adjustment to the depreciation expense?
No, because it's not a full year.
Okay.
It's not a
Yeah.
full month. It's within the 15, before the 15 days from the date of purchase. So that covers, I'm not sure.
Okay.
Not sure.
All right. I'll just go ahead and give you the answers. Okay. So,
Thank you.
the reason why we don't need to make an adjustment is because for units of production, it's not time sensitive whatsoever. All we care about is the capacity. So if this, for the month of June, you drove already 1,200 miles, which is a lot, that's it. That's all you care about. All you care about is not going over the capacity, which in this case, you have a capacity of 150,000. So in this case, it doesn't matter what point in time you are in, whether you're depreciating or not, whether you're depreciating this month or at the end of the year, you don't care about the time sense. It's not time sensitive. So it doesn't matter when you place into service. It only matters what the mileage is or how many miles you drove that time period. So in this case,
Yeah.
we only care about the capacity. All right. So then let's go ahead and solve for the next one. So here we have the depreciation expense for the truck already. So what I'm going to do is I'm going to have you guys list them all out, and they're all going to go into one category, which is the depreciation expense. So here we're just going to do accumulated for each asset. But we're going to calculate everything first and then pull the numbers afterwards, okay? So let's go ahead and solve for the rest. So what does the next scenario say?
Calculate 1 month depreciation for both coffee brewers. The first brewer has a life remaining of 3 years, no salvage value. The second brewer has a useful life of 5 years, no salvage value. Use straight line.
Okay, so brewers. Okay, so I have two tables for them. Okay, so we'll call one of them coffee brewer number one, which is the one that we got from the sale of the store. So we're using straight line for both. Okay. Now, do we have the asset cost for it for both of them?
We should.
Where do we
We
need
should
to
do
go?
ledger.
Ledger. Okay. So here we are, ledger. Let me see. This is equipment for the coffee cash register. So equipment should be down below. Here you go. Here's your coffee brewer. Now here we have two coffee brewers. What was our first one worth? How much did it cost us?
Was 1900.
1900. Okay, so cost of our first brewer is 1900. And what do we know about the first brewer? What is the salvage value?
None.
None. What is the useful life for the first brewer?
3 years.
3 years. Okay, and when did we place it into service? So again, when did we buy it? That's the assumption. Because obviously when we buy it, what's the first thing we gotta do? We gotta test it. So when did I buy this first coffee brewer?
June 4th.
June 4th. Okay, so therefore, do I need to depreciate it this month?
Yes.
Yes, you need to depreciate it for the month of June. Okay. All right, so let's go ahead and solve for the second coffee brewer now. Okay, so the second coffee brewer, what does it say in my general ledger?
It's a 1% discount.
Okay,
And then, so the actual cost, I'm not sure if that here 26, 27 already took up the gift.
26, let's look at it. On the day that we bought it was the 10th.
June 10th. Yeah.
It was worth 26, 27.95. Then on the 25th, we made an adjustment to that very same invoice to adjust it for the discount for $24.53.
Question, Lynn.
Mm-hmm.
Does that fall under historical cost?
Okay, so in this case, because we paid for it in advance, right? So the historical cost will be whatever you totally purchased it for. If you received a discount on it, that applies to your original cost because
Okay.
it's telling you now that what you actually purchased it for is now worth less. Mm-hmm.
So that's 2603.42.
To
2603.
$2,603.42.
okay, so 26, 27.95. So let me go ahead and do my calculation here. Asset cost is 26, 27.95. Subtract 24. How much was my discount? 24.53. Okay, so you should get 2603.42. Yes?
Yep.
Okay. And salvage value? 0. And then now my useful life is how much for this coffee brewer?
5 years.
Okay, and when did I put this into service?
The 20. I cannot remember. Was that the 24th? I cannot remember.
Not the 24th.
I cannot remember.
When did we buy it?
10. 10.
Okay.
10.
And usually, rule of thumb, you need to check to make sure if it works. Okay, so therefore, placing into service, whether you're checking it or not, is on the 10th. Okay, so June 10. Right? So, because it's June 10, what do we need to assume?
It's the first of the month, or we do it that particular month?
Mm-hmm. All right, so let's go ahead and solve for the first one and work our way down. So because we're using straight line, how do you solve for the depreciation basis?
Going to be the same amount.
Cost minus salvage.
First,
Mm-hmm. Yes, because we have no salvage value. Okay, so here, oop, there you go. Right? But we're not going to solve for the rest of the month, so we don't need to apply that limit. Okay. So what is going to be my depreciation rate?
It says, depreciation rate is 1 divided by useful life.
Mm-hmm.
I got point 333333333.
Yes, it's going to be 1/3. Good. Now, how do I solve for my depreciation expense?
It's going to be basis times rate.
Okay, basis
We got
times rate.
$33.33.
$633.33. Okay, now let's look at our scenario again. We place this in service for the month of June, right? We placed it in June on June 4th. And we only need to calculate 1 month's worth. So this, go ahead.
I'm listening. Because it hasn't even, we don't have a previous year, so it's only the current year. And so it would be $633.33.
No.
No?
So the 633.33, right? That is approximately how much you would depreciate it for 1 whole year. Go ahead. Take that 633 and multiply it by 3 and tell me, do you get anywhere close to 1,900?
Got you.
So this is 1 whole year's worth of depreciation expense.
Divided by 6.
Why divided by 6?
If you're in the mid-year, 6 months, June, July, November, December.
Okay.
Should we divide it by 12?
Okay. So Adina says divided by 12. Lynette says divide by 6.
To get the monthly. To get the monthly and then times 6. That
Are we doing it for the whole year or are we doing it for a month?
For the month.
For the month. So what is this going to look like?
I don't know. You tell me.
57.75?
Say that again.
52.7775.
I didn't do the calculation yet, but
38.
The 6333 divided by 12. Then
Oh, she's doing round.
because we have that obnoxious long number. Okay. So it should be 52.78. Correct. Because this is only 1 month's worth. Okay. We don't need to times it by 6 because we're not calculating the end of the year. We're calculating based on a month-to-month basis. So in this case, I only need 1 month's worth of depreciation. Okay, so therefore, my accumulated should be the same. So then what is my book value for coffee brewer number 1?
I got $1,847.22.
Good. So that means I'm going to depreciate $52.78 worth for my coffee brewer number 1. All right, so let's go ahead and apply the same concept down here for our second coffee brewer. So what's my depreciation basis going to be?
26.
cost 2603.
Okay, what's my depreciation rate?
Mm.
0.2.
0.2 should be correct because it's 1 over 5, which should give you 20%, right? So what's my depreciation expense going to be for the month of June?
That number looks odd.
So it's going to be the same formula as the previous one.
It's okay.
Okay.
520.68.
500?
$20.68.
Oh, no, I did not
Oh,
get
what
that.
in the world?
I did not get that. So here, let me see.
Really?
Let me see what you did here.
How did
Okay, because I times we're doing the expense. Yeah, I did the
also time
basis times rate. It's a times. Oh, okay.
20? So
It's 6006.
divided by 12.
Okay, so what do we know about this $520.69?
Eight.
The 68 cents.
For the year.
That's
43.
for a whole year.
That's
Yeah.
right.
So I have to divide
I
it
need
by
to divide
12.
it by 12.
Yes.
We're learning. $43.39. This is getting fun.
$43.39. So what did you say, Tennyson? You said something about 60 cents?
Yeah, because I have put 3060 instead of 2. 1 minute. Okay.
Okay.
Right, 4339. Done.
Okay. All right, perfect. Okay. So we know this is the first year. All right. So what is my book value going to be for
2560.03.
2560.03? 2560.03 is correct. Okay. So there's my coffee brewers. Okay, for the second one. Okay. So let's go ahead and look at the next scenario. What does it say here?
Calculate 1 month depreciation for coffee grinder, 5-year life, straight line, no residual value.
Okay, so let's go find my grinder. Okay, so we know that our method is going to be straight line. Okay, we know that it's 5 years, no salvage value, and now we need to solve for what is our asset cost and when did we buy it. Okay, so let's go to our ledger. Okay, so my coffee grinder is here. How much is my coffee grinder as of today?
4144.
4144.54. 414454. Okay, here we are. 414454. Okay. And when did we actually purchase this item? Or when did we actually place it into service in this case? Because the coffee grinder, oh, I can't find the coffee grinder how many things did we play? We did a lot of extra work into it. So when did we actually place into service? Or when did we actually have it ready?
We need to quit from miscellaneous suspense.
Mm-hmm. Which, what was the date on that?
June 15?
June 15. That's exactly when we finished our installation. We did the foundation. We also did electrical work for it. So now we're completely done with it, and now it's ready for service. And we took it out of miscellaneous suspense on the 15th of June. So therefore, it's ready to place in service as soon as you done that. So in this case, it is going to be the 15th of June. Now, what does that tell you?
We're still within the first group of dates, so the month will still be June.
Good. The month, we will still depreciate it for the month of June. Okay? So we have everything. So this one is straight line. So what is going to be my depreciation basis?
The asset cost for 1.4.
Good, because we have no salvage value. What is my depreciation rate?
Point two.
0.2. Yes. 1 divided by 5. It gives you 20%. Right? So what is my depreciation expense going to be? Make sure you remember to divide by 12 because we're only looking for the month.
$69.08.
$69.08 is correct, which that's our first year's. So what is my total book value for as of the month of the month of June? 4075.46. So here is my depreciation expense for my coffee grinder. Okay? So let's go ahead and continue on with our scenario. What has happened next? Let me pull it down. There you go.
Calculate 1 month depreciation, computer, printer, and cash register. 5-year life, double declining, no residual value.
Okay. So we need to do double declining for the computer, printer, and cash register. All right, so let's do one at a time. So computer first. Okay, so we know it's double declining. Okay. We know that they're 5 years with no residual value. Okay. So let's go ahead and look into our ledger to see how much our computer cost us. So how much did my computer cost me? $1834.84. Yes. $1834.84. $1834.84. Right, and of course we placed it into service on June 5th. Obviously you have to set it up. Okay. So with the date of June 5th, what can we assume? We need to depreciate it for the month of June. Okay. So what's my depreciation basis going to be this time? Okay, and how did you come up with that?
based on the, I don't remember what this initial
You're you're very you're right on point.
BOY depreciation basis cost BOY BW BV. Okay, so what the BOY
BOY, beginning of the year's book
beginning of the
value.
year.
Okay, so good. Since we just started, our beginning of the year book value is going to be whatever the asset cost is. So good. So what's the depreciation rate going to be for this one this time?
1 divided by estimated, which is 5.
Okay.
1 divided by 5 equals 5.
Hmm?
Huh? Wait. I'm sorry. And the useful. Help.
Point four.
Point 0.4. Now, how did you get 0.4?
So I did 1 divided by the estimated useful life time 2.
Times 2 because this is double declining. So
Okay.
yes,
Right.
0.4 is correct, right? We're depreciating it twice as much because that's what double declining is. So then what's my depreciation expense for the month of June?
Times 4. 1834 times 84 times 0.4. Okay. Divided by 12. 6116.
6116. Good. Right, so what's my book value going to be?
1773.68.
Good. All right, so that's the computer for you. Next is the printer. Okay, so we know that it is going to also be double declining. All right, we know the asset useful life is 5 years, salvage value is 0, and or residual value 0, and let's go ahead and look at our ledger. So, when did we buy the printer? And how much is the printer?
378.87. June 5.
Okay, so 378.87,
87.
and we place it or bought it on June 5th. So it's already ready for service. So we know that we have to depreciate for the month of June. Okay, what's my depreciation basis?
378.87.
378.87. Good. What's the rate going to be?
1.
What do you mean 1?
And that is 5.
1.0.
No.
You divide 1 by useful. Wait a minute. Useful life is 5, right?
Correct.
Okay, so 1 divided by 5. Oh, oops. 1 divided by 5 equals 4.4.
Good. 40%. Good. So what's my depreciation expense going to be for the month of June?
Hmm. $8.87.4. And for the month, divided by 12.63.
1263. Right? Because that's our first one. What is our book value going to be?
26624.
26624. I mean, wait, 36624. Okay. Good.
Question,
Yes.
on the depreciation rate, how to, I'm referring it to my notes in here. Is that basically the, how to call this now, fixed calculation? So it's one, the useful life divided by the term times two.
What's term?
The term, the term would be the life.
Okay, so yes, it is going to be a fixed number, so depending on what the useful life is. Okay.
The useful life.
Mm-hmm. And the formula for it is just 1 divided by the useful life, because what we're doing essentially is we're spreading the cost evenly across its life. So if it has 5 years on it, you want to know what one of the years is going to be worth. You're spreading the cost evenly amongst it. But this time, because we're double declining it, we need to multiply it by 2 because we're depreciating it twice as fast. Hence the word double.
Okay. So that means 1 divided by 2.
Not 1.
No, 1 divided by 5 times 2.
Correct.
Okay. Okay, I got it. Thank you.
Mm-hmm. Okay. So there we go for the printer. Now we have the cash register. All right. So we know that we're double declining this. Okay. We know that its useful life is 5 years, no residual value. Okay. So let's go ahead and look into our ledger to see how much that cash register cost us.
It's 49.49.
$649.49. So okay, $649.49, and we place into service on the 6th of June. Yes, because obviously we need to test it out. Okay, so what's my depreciation basis going to be?
The cost, 649.49.
Mm-hmm. And what's my depreciation rate?
10.4.
Mm-hmm. 0.4. And what's my depreciation expense going to be for the month of June?
21.65.
2165, making that our accumulated. So what is my new book value?
62784.
62784. Or did you say 85?
84.
Okay, good. All right, so there we go. We depreciated those 3 assets. So let's go ahead and see what happened for the next one.
The furniture, 1 month depreciation of furniture for 7-year life term, use straight line, no residual value.
Okay, so there you go. Furniture. So furniture, how many items do we have under furniture?
tables, counter, set, shelves.
Good. Perfect. We have all of that stuff under furniture. So let's go ahead and pull up the first one, which is tables in our depreciation table. So here, register, brewer, grinder, tables. Here you go. My method is straight line. Right? My useful life is 7 years, and my salvage value is 0, no residual value. So, when did I purchase and how much did I purchase my tables and chairs for? Six, 66508. 660508 on June 8th. So therefore, when do I depreciate it? June. So here you go. So what's my depreciation basis going to be? Not divide. This is the basis. Good. Good. So now what's my depreciation rate going to be?
That's what I'm saying. I have to go for all my notes. I'm sorry.
That's fine.
Help, help. This is straight line, right?
Well, I'm having to kind of catch up, so we are tables.
I have 0.14.
0.1428. So it's going to be 1 divided by its estimated useful life, right? So 1 divided by 7. And I would recommend you to leave this amount in there so we can have an accurate depreciation expense. Okay. So this one you don't need to multiply by 2 because we're not depreciating it twice as much. We're just doing regular straight line. And this is in the course of 7 years. So we need to multiply across and divide it by 12. Okay? So what is my answer here for depreciation expense?
78.63188.
78.63. Good.
Right.
Okay, that's our beginning. So therefore, what is going to be my new book value? 6522645. Good. Okay. So the next thing I have here is my counter. All right. So I know that my counter is going to be straight line. Right. 7 years useful life and no residual value. So when did I buy my counter? And for how much? Okay, 1193, 1193.22. Okay. So my asset cost is 1193.22, and I placed it in service on June 7. So what's my depreciation basis going to be?
1193.22.
And my rate is going to be
0.142857.
okay. So my monthly depreciation expense is going to be
I'm sorry. I lost.
did you say you're lost?
No, no, the number.
Okay, okay.
No, 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 I'm sorry. Help, help, help.
So we take the depreciation basis and we multiply it by the rate.
Right. Yeah. Divided by 1420.
$14.21 is what we're going to depreciate off of this counter. Okay. So what is my book value going to be?
1179.01.
1179.01. Right? Now we're going to go ahead and depreciate my desk set here. Okay? So I know it's straight line. Useful life is 7 years. No residual value. When and how much is my desk set?
June 7th, 6:58:37.
65837, 65837, and June 7. Okay. Excuse me. So here, we're depreciating it for the month of June. So the depreciation basis is going to be 658.37. My rate is going to be
0.142857143.
good. And my depreciation expense for the month of June is going to be
784.
Yep. 784.
784. Whoa. All right, good.
That should be 650.53.
650.53. Good. Lastly, we have our shelves. So we know that the shelves is going to be also straight line. We know that it's going to be 7 years useful life with 0 residual value. And when did I buy and how much did I buy the display shelves for? Oh, wrong table. There you go. Display shelves.
37 or 57708.
57708. And we placed it on June 7.
Okay, month here. Depreciation basis 57708.
$6.87. Making my new book value to be 570.21. Okay. Since we're in the depreciation table already, let's go ahead and do the last one. Then we're going to journalize it, and then we will call it a day. Okay. So what's the last thing that I have to do? We need to amortize the goodwill. Okay. And it says right here, 15 years. Okay, so let's go ahead and go to my depreciation table since I have the table attached in here anyways. So goodwill. All right. I'm going to amortize goodwill. Okay, so make sure you recognize that. All right, amortization. And I'm just going to put a reference point that it is very similar to straight line. Okay, so what's my useful life? And let's go ahead and see when we got the goodwill and how much the goodwill is actually worth. So my assets, here's my goodwill. Right, goodwill happens immediately. Okay, so here we go, 2100, and I placed it into service on June 4th. Okay. So, amortization, there's a few little different formulas, but it's similar to straight line. So in this case, what is my depreciation basis going to be?
2,100.
2100, yes. It's going to be your asset cost, and because intangible assets don't have a salvage value, it's just your asset cost. Okay. So what's your depreciation rate going to be this time?
0.0666666667, somewhere in there.
Yeah, good. Right? 1 divided by 15 gives you that. Right?
1167.
Okay, hold on. So equal round.
Depreciation. I did that right?
Yes, you did. 1167 is correct. So what is your goodwill worth now?
$2,088.33.
2088.33. Okay. So now let's go ahead and journalize our calculations. So again, let me see if I have enough space. I should. Okay, yeah, I should definitely have enough. Okay? So, first things first, we're going to have depreciation expense because that's exactly what we solved for. Okay? Now, every single thing that I have made, right, because due to the historical cost, we cannot directly take it off of the asset. So therefore, what account did I create to calculate this depreciation? What are they called?
Repeat that.
So, because due to the historical cost concept, we have to create a contra account. What is that account called for each and every single asset? To
Accumulated depreciation.
accumulated depreciation. Now, let's look at our chart of accounts. How many accumulated depreciations do we have? Oh, there you go.
We have 10 accounts.
Yes, we have one for every single asset that we depreciated for. So let's go ahead and go through each and every one. So the first one I see here is the accumulated depreciation for the tables. So we'll just do it in this order because there's too many in here. Okay, so you said 10, right? So let me see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, so good. So first one's first is accumulated depreciation tables. So in this one, I think I have, it's just ACUM, depreciation tables. Okay. How much did I calculate for my accumulated depreciation for the tables? 7863. $7,863. Okay. So the next thing on my list is accumulated depreciation counter. ACUM All right, and how much was that for? 1421, right? Because the historical cost says you cannot directly take it out of the inventory, the asset itself, right? It has to remain whatever you originally bought it for. So we need to create a contra account to determine, well, if we're using it, it's not going to be the same value that it holds anymore. When you sell it, obviously, you're going to either take a loss or a gain, depending on how much you sell it for. Okay? But the book value that you calculate for is going to be a estimated of how much it should be worth for. Okay? So accumulated depreciation for the counter was for $14.21. Okay? So what's the next thing I have? I think I have just accumulated depreciation for the desk. Okay. And how much is that one for? $7.84. Okay. Okay. So the next one should be accumulated depreciation for my shelves. All right. And for my display shelves, how much did I actually calculate? $6.87. Okay, $6.87. All right. So now that I've gone through that, next should be my office equipment. So office equipment will entail the computer, printer, and cash register. So in this case, I have AQ depreciation computer, and I have accumulated depreciation for the printer, and I also have the accumulated for the register. Okay, so out of each one for my computer, how much did I depreciate it for? 6116. Okay. And then what about my printer? How much did I depreciate that one for? 1263. Okay, and then what about my register? 2165. Okay. And then next is going to be equipment. So I have my coffee brewer and coffee grinder. So here you go. I have accumulated depreciation. Depreciation for the brewer. And I have the accumulated depreciation for the grinder. Okay. All right, so now I'm going to go ahead and look here. Now, I have two brewers here. So what I'm going to do is I'm going to add them together because in my ledger, I only have one account for my coffee brewers. So therefore, I only have one account for my accumulated coffee brewers. So what's my total going to be for both for the first coffee brewer and the second coffee brewer? 9670. 9617. Okay. And then how much was my coffee grinder for? 6908. 6908. All right. And then lastly, we have our truck. Okay. So how much was my truck for when I find it? Shelves, truck. 257.67. 257.67. All right. Is that all 10 accounts? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. All 10 accounts are here. Okay, so that gives me a grand total of how much depreciation expense.
$625.91.
$625.91 is what I got as well. Okay. So let's go ahead and can you tell me all the account numbers? So what's depreciation expense?
13011. No, it's
Six.
66000.
Okay, and then accumulated depreciation for my table. You can read it all the way straight down.
13011.
13011.
Then 13021.
Mm-hmm.
13041.
41.
Sorry,
Oh,
31.
31 for the desk. Okay.
Yeah, 41. And 14011. 14021. 14051. 15011. 15021. And 17011.
17011. Good. Okay. And then again, you can go ahead and make a note saying adjusting for depreciation. Adjustment for depreciation. Okay. And since we're already here in our journal, let's go ahead and journalize the amortization expense for the goodwill, so then we can just place them all in our ledger all at once. So amortization expense. Okay. And what is my account going to be here? It's going to be the same like depreciation, except you don't use the word depreciation. Yes? Anybody?
Appreciation. I'm just putting the opposite way. I'm sorry.
So it's good.
Amortization.
Amortization. Goodwill. All right. And that's going to be for the 1167. So I'm going to double check that and confirm. 1160. Goodwill is 1167. All right. And then can you tell me what my accounts are going to be?
66500.
66,500.
Yeah.
Okay.
Then
And
19101.
hmm,
19101.
190.
101.
Okay.
No, 19101.
19101. Thank you. All right, and then here, same thing. You can just write adjustment for amortization. Okay, so now I'm going to go all the way back up to my last section, which is the depreciation expense, and go to my ledger and fill them all in. So go to my ledger, I have depreciation expense, which is going to be operating expense. So here's depreciation expense, 630. Okay.
Doesn't go out of the even front, it stay here. Yeah, and it don't go it goes. And the other one you can fix that finish today.
There you go. Okay, so going back to my depreciation tables. Okay, and going back to my ledger. So, I'm sorry, going back to my journal and posting it to my ledger. So here I found my depreciation expense. I write adjustment. So what journal is this? I think this is journal number 22.
Is it 22 or 23? I'm sorry.
23 is for the amortization. Okay, general journal 22. All right, and what's my debit going to be?
625.91.
$625.91. All right, and that's obviously going to be the beginning of my debit account here. Good. Now we got to go through every single accumulated depreciation for every single asset in our list. So, starting from the top with our furniture. Okay, so bistro tables accumulated depreciation for tables is going to be 630. Okay, general journal number 22. And how much am I crediting my tables for?
7863.
7863. Therefore, that's my beginning balance there. Okay, good. Same thing for my accumulated depreciation for the counter.
1421.
For 1421.
Same as credit.
Yep. Okay. Then I'm going to go down to my accumulated depreciation for my desk. Same thing. I think I'm going to write ADJ for adjustment short. Okay, so general journal number 22.
784.
784, making my credit the same. Okay. Same thing, scroll down to my accumulated depreciation for my shelves. Credit for $6.87. Same thing with my credit here, $6.87. Okay. Then we're going to scroll all the way down. So here we are at equipment. Here we go. Our first one is a computer, accumulated depreciation for computer. ADJ. Right, general journal number 22. For what amount? 6116. Therefore, that's my credit balance there for 6116. All right, now I'm going to scroll down. Next one is my printer. 630. ADJ for adjustment. General journal number 22. For what amount am I?
1263.
1263. Right? Same thing as my other current balance. Okay. Scroll down. Here's my register. Adjustment. General journal number 22.
2165.
$21.65. Oop. Went too far over one. There you go. So 21.65 should be my balance. Okay. And then we're going to go into our equipment. So here's the coffee brewer. So here's my accumulated depreciation. $96.70. 17, sorry. $96.17 is our new balance. Okay, so then our coffee grinder. Nope, you cannot take it directly off of the actual item. Yes. 22. Credit is going to be 6908. Therefore, that is my new balance. Okay, so here's my vehicles. Here's my truck. Accumulated depreciation for my truck is going to be GJ22 25767. All right, in my credit account, and therefore my balance is going to be 25767. All right, and then lastly, let's go ahead and do my amortization. So here, operating, amortization. $1167. Okay. And then we're going to go all the way to our assets under goodwill. I have accumulated amortization, goodwill, 630. Same thing, ADJ for adjustment, general journal number 23. And it's credited for 1167. Okay. So right now it is exactly 11:40. We will stop here for our adjustments. So when we come back, all we got to do is now accrue for Irene and also do this office supplies. So we got to do these here, and then we'll finish off by creating our adjusted trial balance and also doing our financial statement. So tomorrow is going to be the end. Okay? The end of everything. So make sure that you go ahead and do this. I will go over everything, so don't worry. So other than that, we're going to stop here today.